Welcome to episode 5, our last episode in our 5-part series on how to master the charts. And I've saved the best until last. What we're going to do in this episode is we're going to go over everything I've taught you so far in episode 1, 2, 3 and 4, but put it together on the charts now from an institutional level. What I'm going to show you is some interviews from hedge fund managers, institutional traders on how they read the charts. Now, rather than having a retail trader like myself telling you how an institutional trader would trade, we're actually going to let an institutional trader explain how they trade. And what I'm going to do with you is dissect through the lines, try and understand how they trade, where they put their stop losses, where they put their entry points, and then we'll put everything that I've taught you in episode 1, 2, 3 and 4 together with what we're just about to watch and learn how an institutional trader would. We'll put it together on the charts, we'll come up with a strategy, and I'll show you just how powerful it can be. So yeah, let's jump straight into it, and I'll see you on the charts.
It's always looked upon as negative, certainly at the retail trader level. Institutional traders are taught from their first day that they buy good levels or they don't buy at all. Unfortunately, most retail traders will wait for some confirmation before they get in. That could be a candle pattern, could be a moving average cross, or whatever. Institutional traders will buy at the level. Now, most traders will put their stop loss a tick under the last low, and they will invariably put their stop loss at exactly where the institutional orders are. I think that institutional traders are just doing what institutional traders do, putting their entry points at very good levels. However, if you are trading at the institutional level, it's not always easy to get filled. At the retail level, if you want to buy 100 shares, you want to buy the pound against the dollar at a 5 or a point, you press the little button and you've got it. At the institutional level, it's not that simple, and you've got on occasions to actually generate the liquidity to get aboard. I don't think that anybody looks at where the stops are, but they will say to themselves, well, we know pretty sure that most of the stops will all be crowded around this obvious level. So they will bid the market at that particular level. All you need is one person to chicken out, and the markets are going to go where the bids are, and all those people will be taken out. If you do not think long and hard about where you're going to put your stops, that you're going to find that you can quite easily die in a sea of stop losses. And here's an exercise for some people. The next time you're just about to put a trade on, you pick up something heavy and you just go poof. And then you write down on a piece of paper where you're going to buy and where you're going to put your stop loss. Don't buy it, but put an order in to buy it at where you're going to put your stop loss. And then just watch how many times the market goes to your order. Markets will go to the obvious stops most of the time. And one of my rules is that I want to put my entries where the masses put their stops. If you don't get in at a good level, there's nothing that upsets me more than a guy saying that this is a very risky trade, I'll use a tight stop loss. That's just rubbish, because you'll get stopped out over and over and over again. The stop needs to be where the stop needs to be. So if your entry is sloppy, then your stop loss is going to have to be a red bus away from where you got in at to give yourself a chance of staying in the move. The average true range will help with that. Most traders will look at a stop loss of 2.5 times the average true range or something like that. Nevertheless, if you want to get in with low stop losses at institutional levels, you've got to be brave. The institutional traders will use Fibonacci levels, they will use trend lines, they will use simple horizontal support and resistance levels to actually look for confluences to try and place their orders. Nothing clever, okay? Unfortunately, most retail traders, as I say, will look for some form of confirmation and their stop loss will then be too close and they'll get taken out in the noise.
I'm going to be a huge contrarian to everybody else who said, be careful, be careful, be careful, have tight stop losses, tight stop. But tight stop losses, I am certain, is the main reason why most traders don't make money. Because before a trade moves your way, it usually moves the opposite way, because the people in the market they have to make money from you, and they know they're gonna close you out, because most of you have tight stop losses, so you never get to make money. I'd say if you're confident about a trade, don't have tight stop losses. Have a big gap between your stop losses. So if it goes down and it backs up to where you want, you're still in the trade and you're not taken out. I would say stop losses is the main reason why most traders don't make money, even when they get it right. When they know the direction is right and they still get taken out, it's because of your stop losses. I say, don't listen to anyone who says have really tight stop losses. If you are confident, don't have tight stop losses. You will lose money even if you are right in guessing the direction.
Are they ever a good idea?
They're good ideas sometimes, but then I would say if you're not sure about your trade, then don't do it. Don't do it. It's a good idea if you have a huge position that, over the weekend or whatever, some massive political event is going to happen, and by the time you can catch up with it, it's too late, you're wiped out. So in that case, it's good to have a stop loss. But still, I would say don't have your stop losses too tight if you can help it. You have to judge where you are, what time of year you are, what's going on geopolitically, whether it's safe generally to keep your position open without a tight stop loss. Stop losses, I would say, if there is a research done, that people would find is the main reason why when they guess the market direction right, they never made money, because they get taken out. And the people who run the markets, they know their game. They know if they go down before they go up, they're taking you out.
How fascinating was that? Listen to how a hedge fund trader views and trades the market. Now, one of the ways that I've become successful in life is kind of looking at the people that have the results I want, that's successful, and asking what they do. Can you give me some tips, advice? And the majority of the time they'll say, work hard, have a passion, follow it, and believe in yourself. But what I try and do is work out what they're not telling me, because they're obviously doing something that they're not telling me, and I need to do the same. So let's dissect now what these hedge fund traders were saying. Now, it's funny because all retail teachers out there will tell you the same thing, won't they? Use tight stop losses and big risk reward ratios. And the institutional traders, the hedge fund traders, were saying the exact opposite. You do not want to do that. The reason why you lose trades is because of your stop loss. And they said, both of them said, didn't they? The reason why you lose is because of your stop loss. It's just too tight. So what they were doing was using a wider stop loss. And I found it interesting because it makes you beg the question, who is telling you to use tight stop losses? Is it the banks and institutions? Are they the people that originally said, use tight stop losses because you'll make loads of money? But in reality, the hedge funds, which are moving the market, are actually trading with wider stop losses. So what we want to do now is start to introduce a wider stop loss. Now, they also mentioned that they look at horizontal support and resistance areas, Fibonacci levels, trend lines, one of them even said. So we know that they use these to place their trades, but where they place their trades are a little bit different. They're placing their trades where we place our stop losses. Now, the first institutional trader, hedge fund trader, the first thing he said was, I teach my traders to buy at the right level. If they don't buy at the right level, don't buy at all. Retail will wait for a confirmation, engulfing candle, a change of character, whatever. Institutions won't. They will buy directly at that level, and their entry point is where retail put their stop losses. And it's quite fascinating because if I just give an example here, right? If you've got a resistance line at the top, retail, I've taught you to say, as price comes up into this resistance level, you wait for an engulfing candle, you enter the trade here, you put your tight stop loss here, and you ride the price down. That's what retail teach you. In fact, institutions do the complete opposite. What they do is you've got your resistance level here. Now they already know they want to sell, right? They've looked at the bigger picture, perhaps off a fundamental analysis, or even looked at the higher time frame. They know as price comes up into this resistance area, they want to sell. Now they're not waiting for an engulfing candle or confirmation. They will buy directly at this level. Exactly what that hedge funds trader said. They buy at that level. So they buy directly here. So they'll enter the market here and they'll use a wide stop loss. Okay. And let's say, and one of them even said as well, price will go against you. It will always happen, right? That's why we use wider stop losses. They use a true range average. One of them even said. So where institutions are entering is where, see the institutions are entering here, right? Which is where retail are taught to put their stop losses. So it's fascinating, isn't it? So what we're going to do now is we're going to put that all together on the charts now and come up with a nice little strategy, which I'm going to show you now, which is going to make a lot of money. Now, what we're going to be focusing on is, first of all, the higher time frames. We're going to look at the bigger picture and we want to be trading with the flow, the order flow in the market, what the institutions are doing. So what we're going to do is we're going to have the daily time frame, and what we're looking for is basically a trend down and pullback, and we want to be entering the pullbacks in the market, because on the higher time frames, these are where the institutions are moving price, right? If price is in a downtrend, everybody else is selling, the institutions are selling, and we want to be doing the same. Okay, so if price is in a downtrend on the daily and it's pulling back, we want to look for sells, right? Then we want to scale it down to the 1 hour time frame, and we don't want to wait for an engulfing candle. We want to enter directly at that level. We don't want to wait for confirmation. We want to enter directly at that level, and we want to put our stop losses and entry points exactly where institutions are going to do the same. Okay, so what we're going to be looking on the 1 hour is something like this. You'll have an uptrend, a pullback, an uptrend, a pullback, and you might have a resistance area here. Okay, and what we want to be doing is entering here. This is where we want to be entering. We don't want to be entering down here. We want to be entering right at that level. No confirmation. Okay, and we put our stop losses wide to factor that in. Yeah. What we also want to do is look for an entry point off the 5 minute time frame. So what we're going to do, this is going to get a bit, hold on, I forgot the word. We're going to get a bit technical. What we're then going to do as well is go down to the 5 minutes and look for a change in character. So we're going to look for something like this here, right? This is what's going to happen. The daily is going to be saying break and pull back like this here, perhaps a sell at a resistance area, okay? On the 1 hour, we're going to be waiting. Obviously, price is going to be an uptrend, isn't it? Because it's going to be on the pullback off the daily. And we're going to sell directly at this level. We're not going to wait for engulfing candle or any confirmation. We're just going to sell directly at that level. On the 5 minutes now, we're going to look for a change in character like this here, okay? And we're going to enter on the pullback here, okay? And we're going to sell. So what we're doing now is we're putting both time frames together. We're putting the daily, which is telling us to sell with the momentum, and we're going to be using the 5 minutes as our entry point. And what we're going to do on the 1 hour is just enter straight away. We're literally not even going to wait for engulfing candle or any kind of significant candlestick to confirm that we need to enter. We're literally going to enter. So let's jump on the charts now and start to put it all together. Okay, so yeah, I'll see you on the charts. So one of my subscribers in my last video asked if I could simulate gold, stock or Bitcoin. Now I'm going to be simulating GBP/USD currency pairs, and the reason being is because I need to explain to you in a simple way. It's pointless you being here if you can't see what I'm trying to explain to you. You know, if I'm seeing patterns and you can't see the same, it's pointless. Okay, I also recommend you to go watch episode 1, 2, 3 and 4 because it's going to make a lot of sense. We're putting everything together now on the chart. So let me just quickly load up GBP/USD now. GBP/USD. I'm going to go load up the 5 minutes. We're also going to be loading. Yeah, I want to be loading up the 5 minutes. Give me a sec. GBP/USD charts. We're going to add the 5 minutes. We're going to add the 1 hour, and we're going to add the daily. Now, I'm not showing you any kind of strategy here. I'm just showing you how the market moves, right? And then entering trades. If you want to incorporate it with your swing style strategy, if you want to incorporate it with a scalping strategy, it's up to you. I'm just literally trying to explain to you how the market moves in a very simple way, okay? And I want to show you that you don't necessarily need a complicated way of trading. I was just loading up the daily there, so I put the daily like this here. Okay, and again, we're just going to break it down now. I'm going to bring up the 1 hour, add that up. Like, oh, hang on, I've already loaded up the 1 hour, so get rid of that there. 1 hour, naked, good, good. Bring up the 1 hour, there we go there, the daily, naked, and good. Right, okay, so let's start off. First of all, we're going to be focusing on the daily, okay? And I'm going to be adding a moving average. If you watched episode 1 or 2, I was talking about moving averages are great for identifying trend. The higher the moving average, the higher the trend. The lower the moving average, the micro trend, okay? And we want to be looking at what's happening now on the daily, okay? We want to know what the market is doing, which way the institutional traders are buying and selling, and we want to do exactly the same, okay? So on the daily, we've got a downtrend, okay? You can see we're below the moving average. So what I'm looking for now is a break and retouch. So let's just keep it simple. On the daily, we're looking for a break and retouch, right? And that is basically it, right? So let's do that, okay? Let's go to the daily now. I'll make myself a little bit smaller. I'll put myself out the way. I'll put this here. And okay, I'm looking for a break and retouch. Now I know we're below the moving average, so we're probably going to be coming down. Let me do this off the daily. There we go there. And I'll speed it up just a little bit. Okay, right. So daily is coming down, but I don't just want to sell. I want to do what that institutional trader said, that hedge fund trader said. And what did he say? He said, you buy or sell at the right level, or you don't buy or sell at all. So just because in a downtrend, I don't want to sell. I want to sell at the right level. And that level is a break and retouch, basically, when I find it. Right, okay, looks like price is pulling back. Let me make it a little bit faster. Okay, right, here we go here, right, here we go here, here we go. Now we're rocking, right, okay, so we're coming down. Ooh, hold on, here we go, right, okay. So, this is what we got now. Okay, break and retouch, you see that? Price is in a downtrend, so we got trend down, pullback, trend down, pullback. Yeah, you can argue that we've actually broken resistance here. We could actually put a resistance just there, but this is what I see at the minute, right? I still see that we're going into a downtrend, right? I see a break and retouch, yeah? Right? This all depends what I see on the 1 hour. So on the daily, I see break and retouch, possible downwards move. On the 1 hour, okay, on the 1 hour, I've got this perfect. This is what, if I go back down to the 1 hour now, this is what I'm looking for on the 1 hour. Right. Okay. So, remember what that institutional trader said. They put their stop losses, no, they put their entry points where the masses put their stop losses. So this is what I'm looking for on the day, on the 1 hour now. So on the 1 hour, I see a resistance area. Touch, touch, touch. See that? Right, you see that? Can you see that? Touch, 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 yeah? So I know, right, hold on here, just here, we use this candlestick here. When a lot of traders see this, they're going to start to sell here, right? They're going to start to sell. And where are they going to put their stop losses? Here. That's where they're going to put their stop losses, just here, right? And it, you know, like they're told, tight stop losses, tight stop losses. We want to do the opposite. We want to put our entry point where the stop losses are, and we want to use a wider stop loss, yeah? Because that's what the institutions told us, right? Now, what I'm looking for on the 1 hour is that there. I want stop losses to be took out, which they just have just here. Yeah, see that? So now we've got a break of structure, right? This is confusing, but I want you to understand. On the 1 hour, I'm waiting for stop losses to get took out. Once they get took out, I will start looking for sells, right? And I want to put my stop loss here. I want to sell right here because everyone's being stopped out at the minute because they sold at the bottom here. So what I do now is go down to the 5 minutes. I'm now looking for a break and retouch, right? So still in an uptrend. Yeah. Then we start to come down, which is going to be, we're still going up, we're still here. Right, here we go. Here we go here. Right, here we go. You ready? 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 Retouch. There. Watch this. Watch that. Just there. Just there. You see this change? In fact, if I had a 10 moving average, you might be able to see it. 10 moving average. Yeah, see how we've just gone below the moving average? See that? So we've actually got now a change in character. We've got uptrend, pullback, uptrend, pullback, uptrend, pullback, uptrend, pull down, pull back. See that? Resistance. So see what happens now. We've got now putting the daily in our favor. Now this is why I say it's a little bit confusing, because you've got to kind of understand it. On the daily, we've got a break and retouch at this level, and literally look where we're selling. We're selling right at that level on the daily. On the 1 hour, we want to see a liquidity sweep, right? You can see here, right? Literally everyone got stopped out selling here. And now a lot of traders are going to look for buys here, right? So if you're selling, you got stopped out. If you're looking for buys, you're getting stopped out. On the 5 minutes, we're looking for a sell, right? So daily sell, 5 minute sell, 1 hour, everyone getting stopped out. Yeah, makes sense. Watch this. We'll take a trade here, and just to show you my method, and like I said, we'll use a wider stop loss, right? We're not going to use no stupid 5 pip stop loss or anything like that, because the institutions told us not to, because you'll get stopped out, right? I mean, we could do, we'll take 2 trades, okay? We'll take, just to, you know, we'll see which one wins, right? I don't know if this trade wins. 1% risk, we'll take one with a 5 pip stop loss and a 200 pip take profit. And we'll take another one with a 20 pip stop loss and 200 pip take profit. Both trades, good risk reward ratio. Both risking 1%, right? Both got a 200 pip take profit. So both trades here are fine. 20 pip stop loss, 1%. 5% stop loss, 1%, right? Both have got 200 pip take profits. Let's see what happens. First of all, on the 5 minutes, I'm looking for that break to happen, which has just happened there. So great, done exactly what I wanted to do. Let's keep an eye on the 1 hour now, right? Let's keep an eye on the 1 hour and see what happens, right? Don't stop me out, okay? Don't stop me out. Okay. Okay, so the 5 pip stops us out. And then we should come down. Oh no, I'll do it on the day. I'll do it on the daily. There we go. That might be a little bit faster. Oh, hang on here. Right, slow it down here. Let's get a look at the daily. Okay, so, and do we get our 200 pips? Yes. So see the difference now. See the difference. Same trade, same entry point, tight stop loss, big risk reward, stops us out. Same again. 20 pip stop loss, and we still made 9%. We actually would have made 10%, but because we took 2 trades and we lost one, we only made 9%. But 9% with a wide stop loss is not bad. That's what you need to understand, right? By using tighter stop losses, as that hedge fund said, you just get stopped out. You just get stopped out, as he said. So let me actually have a look on the 5 minutes where I did get stopped out. Yeah, literally. To be honest with you, my entry point couldn't have been any more perfect. I mean, it literally is a little, look. And again, even off the 5 minutes, you can say, well, hang on here, this is where you get stopped out. So even on the 5 minutes, you get stopped out, right? Wide stop loss. So let's carry on now. Let's carry on. Let's see if we can find 2 more trades, yeah? 2 more trades. Because I'm just cautious of how long this video has been going for. Right, okay. So on the daily, let's carry it on again. Okay, wow, that was a big move down, Okay, right, so so still going into a downtrend, Looks like we're slowing down on the daily. We pull up. Oh, that would have been a really good entry point. I'm just trying to get it perfect. Right, there. No, you know what? No, because that would be conflict of interest, wouldn't it? Right, we come down. I'm waiting for, where's the 1 hour? I'm trying to find a perfect setup. I need to have the 1 hour here actually. Let me put the 1 hour here. because I need to have the 1 hour side by side so I can see liquidity, I can see price, people getting stopped out. Okay, right, so nope, not there either. Okay, so we're going into a, still going into a downtrend, okay, maybe here, no, here we go, right, okay, let's go take it to the 1 hour. Let's take it to the, I was waiting for a change in character. I'm waiting for price to go into a moving, basically I'm waiting for price to close above the moving average so I can look for a buy instead. I'm trying to find a buy. Here we go here. I'm waiting for price to come down. It'd be great. Come on, come down and retouch. I'll do it off the daily. Ah, here we go here. Right, okay. I think we've just got an entry point here. Right, okay, here we go here. Right, okay. So what are we looking at here? No, I still think price is going to come further down. Give me a sec here. Yes, it is. There we go there. How did I know that was going to happen? Right, okay, so on the daily, again, we got a break and retouch. Quite simple, yeah? Obviously, we did have a lot of sales as well. We did have a lot of sales on the way down. You know, just to show you, I can show you where they all were anyway. You got a break and retouch here. Okay, you've got a break and retouch here, you know, and all these opportunities you could have sold, right? You could have sold here, trend down, pull back, sell, trend down, pull back, sell, trend down. Obviously, I didn't want to take a sell. I'm looking for buys, and now we got this here. See that makes sense, yeah? See that makes sense, uptrend, yeah? So now I was looking for a liquidity sweep on the 1 hour. So, and we just got it just here. So here, right here, is where everybody would have bought. So again, what you've got here, right, is you've got everybody buying here, thinking that you're going to get stopped out, thinking price is going to go up. So you've got an uptrend here, right? You think the price is going to go into an uptrend. So again, you put your stop losses here, or like that hedge fund said, stop loss here, you enter on the engulfing candle, and what happens is price comes up and stops everybody out. And where we want to enter is here. We enter here where the masses get stopped out. So we put our entry point here. So you see what we're doing now? It's doing the opposite. Rather than a sell, we're looking for buys. We're looking for a support line that is going to get broken, take everybody out, and that's where we're going to buy. We're buying right at the level, yeah? You go to the 5 minutes, and we were looking for a change in character, right? So again, on the 5 minutes, we are looking for there, just there. That was the change in character here, right? And again, we will, just to prove the madness, we'll go for a 20 pip stop loss, a 200 pip take profit, and again, we'll go for a 5 pip stop loss, yeah? 5 pips. Just to see the difference between a tighter and a wider one. Okay, so let's see what happens. Okay, so let's see what happens here. Hopefully we rock it up. Nice. I'll do it on the 1 hour now. Okay, watch this, right? See how we just got took out here, right? See that massive rejection wick just here? Watch this, right? I'm going to re-enter this again. I'm going to wait for a change in character on the 5 minutes. Watch this. I'm going to wait for a change in character on the 5 minutes. Watch this. Ready? There. Just there. See that? See that? I'm now playing the opposite. So even though I've got stopped out, watch me re-enter. You see how we come back down to this level? Right, you see how we come back down, and if we go to the 1 hour, again, look, everybody getting stopped out here. Watch price, I guarantee price is going to rock it up from here, because you've got sellers trying to sell the market here, trying to buy the market. You've got buyers trying to buy the market here, stopped out. Watch price rock it up. I wouldn't be surprised if price just goes bang, straight up. Watch this. And again, we'll go for a 20 pip, yeah? Watch what happens, right? You ready? So I'll do it on the 1 hour, so you can see. Okay, you ready? In fact, might be a bit on the daily. Here we go here. All right, come on. There we go there. Look at that. Look at that. There you go. We now made 17%. And I bet your price will push higher. Let's see what happens. I'll do it on the daily. Okay, no, it comes back down. But you see the difference? See the difference? So on the daily, we were looking for a break and retouch. See that? See the break and retouch? And notice how we came further into that level on the daily. See how we came further into that level. So on my actual entry point was wrong. It was wrong by about 15 pips. So we came further into this level, right? On the 1 hour, you've seen everybody see how everybody got stopped out and then price just went straight up. So you would have had sellers getting stopped out because they would have thought price was going lower, and you would have had buyers getting stopped out thinking that price was going to go up, and it just kept stopping them out, and that's the difference between a wider stop loss. If I had a wider stop loss here, I would have won the trade, and that's the mistake I made. My entry point was sloppy, but my stop loss was too tight. You see the difference? And that's exactly what that institutional trader said. So let's find one more trade. Okay, by the way, look, I'm up 17%, so it's not a bad one. Let's find one more trade, yeah? One more trade. Okay, so again, we're now in a downtrend off the daily, yeah? So I'm looking for a retouch of this level. So we're actually still in a downtrend. Nothing's changed. Let's see if I can, I'll see if I can capture it on an uptrend. See if I can get, we've been in a downtrend for quite a while. I want to see if I can get a massive uptrend. Here we go here. Looks like we're going into an uptrend. We're going to definitely come back down though. We're definitely coming back down. Come on, nope. Okay, right, here we go here. Come on, push down into this level. Come on, yes. That is where we want to be buying. Just let me just check the 1 hour. Let me check the 1 hour. No, because what you're going to get on the 1 hour is, I just want to show you something. Is you see all these stop losses here. See this here, right? Everybody's going to be buying here, isn't they? How many people are going to be putting their stop losses here, buying because of this support line? See that? So I want to wait. I want to wait for this to get took out. I want this level to get took out, and then I'm going to buy. So let's see what happens, right? Now we rock it up. I'm looking for, no, price is still gone up, which is not what I'm looking for. Right, okay. Oh, I missed that. I literally missed that. Okay, right, let's see if I can get that again. Here we go here. Right, okay, watch this, right? So, hold on. I'm going to do it bar by bar. Let's come lower. Come lower. Yes, just there. Okay. See what I'm doing now? Right, so, see the uptrend. Can you see the uptrend? Uptrend, pull back, uptrend, pull back, uptrend. See that? See the uptrend movement, yeah? Can you all see that? This is the perfect setup. So I've got this perfectly, and it's easy to explain. Here. Right? Here. So here, we've got a break and retouch. You see that? You see the break and retouch, yeah? Simple on the daily. Watch this on the 1 hour. Right? You see where everybody would have put their stop losses. This is the important part. This is what you got to look for. This here. Everybody at this point here is buying the market. They're seeing the resistance, the support, and they think, I want to buy here. This is where I'm buying. Where do you put your stop loss? Here. So what I'm looking for is this level to get took out. Yeah, I'm looking for that level to get took out. And what happens? Bang, happens just there. And I'm looking for now, after 5 minutes, a change of character, right? And it happens just here, just there. So there's the change of character. We've now gone from a downtrend, pull back, downtrend, new high, pull back, buy. And again, we're going to factor in a wider stop loss. Yeah? See what we're going to do here? we're going to factor in a wider stop loss. So we'll go back to the 1 hour and we'll put, again, we'll go for 20 pip stop loss. I mean, it should be a little bit tighter. Yeah, we'll go with 20 pip stop loss, right? It stops me out. I take another buy. Watch this, right? There we go there. There we go there. See? See price rockets up? There you go there. See? Do we get our 200 pips? Let's go to the daily. And I'm going to close that trade off just there. Close all. And we've made a 25% gain. So see what the difference is, right? And if you go back to the 1 hour, again, 5 minutes, you go to 5 minutes, again, see about my stop loss. See, my stop loss was in the wrong place. Again, I didn't have a wider stop loss. So even though I'm showing you the perfect entry points, pretty much every trade went nicely into the money, it was my stop loss that was stopping me out. Even though I'm going for a 200 pip take profit, 5 pip stop loss, 20 pip stop loss, if I just bring a wider stop loss into play, we would have won every single trade. So even though we did lose some trades, even though perhaps my entry point wasn't the best, but the overall direction is right, it's proof that by using a tighter stop loss is not necessarily the best thing to have in trading. And just, yeah, like I said, if you do what the institution said, if you believe in your trade, use a wider stop loss, allow for price. Even when you look back on the 5 minutes, right, you can see how price came, hang on here. You can see, how long is this video been going for? 22 minutes. You can see how price came down, stopped us out, created a lower high, bang, done, bang. You can see the difference now, can't you? So what we're looking for, daily. Wait for it to go with the momentum. If it's below the moving average, we take sales, break and retouch. We then look for the 1 hour. Look to see where the liquidity is, right? Where everyone's putting their stop losses. Wait for that level to get took out. Then go down to the 5 minutes. Look for a change in character. Sell, voila. Wide stop loss, win the money. So yeah, hope you enjoyed that video. Hope you enjoyed that mini series. If you like it, thumbs up, subscribe. Thank you. My name is Jamie Palmer. And if you have any emails, drop me an email, thebinarydestroyer@gmail.com.